Welcome to Bloomberg Markets. I'm Shanali Bassick. Our top story today is stocks are rallying and bond yields tumbling. Big bid in that bond market after Fed Chair Jerome Powell said the time has come to cut interest rates. Let's take a look at these market moves. We have the S&P 500 and NASDAQ 100 each up about 0.5%. And in the bond market, you have that bid across the curve. Yields down, prices up. You have the 2-year yield at 3.93 into the middle of this Friday and 3.80 on the 10-year. Let's take a listen to Chairman Powell speaking in Jackson Hole earlier today, really causing a stir in these markets.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Nancy Tengler, CEO and CIO of Laffer Tengler Investments, joins us now. And you heard that Powell speech. The time has come. The moment is finally here for this historic rate hiking cycle to end and start reversing. But the question remains how fast that course reverses. What can investors really expect from here, Nancy?
Yeah, so thanks for having me, Shanali. I wasn't as pleased with the speech as everyone else seems to have been. And the market, as you might have noticed this morning, rallied pretty hard in anticipation, held that rally for a bit, and now has faded. And we're not even really recouping what we lost yesterday. So I think the market is stepping back, thinking about it, at least the stock market, though the bond market still seems pretty aggressive on the rate cut front. I don't think that's going to be the case. I think we'll probably see 25. We may get 50. I don't think so. But then I think the Fed's going to pause for a while because we still have sticky inflation. And that has not receded. It's at 4.2%. And so I think the Fed has to be mindful of that. But I do think the cut is necessary to sort of break the logjam in the housing market, give manufacturers a bit of a reprieve, though that's not going to happen likely for many months.
One of the bigger problems here, Nancy, as well, is even if you get that first cut in September, you really only have a few meetings until the end of the year, and the market is still pricing in 100 basis points of rate cuts. If we don't get those cuts, how is the market supposed to take off from here? The stock market in reaction?
Yeah, well, that's the right question, Shanali. I think stocks, the good news is we had a great second quarter earnings report, about 12.5% for the S&P 500 companies, over 5% in revenue growth. That's solid. But we also saw guidance that was coming down, I think, around the uncertainties of the Fed, the election. And so I think investors need to be focused on dividend growers and companies that are able to deliver strong earnings growth, reliable earnings growth, because we are in a slowing environment. I think the BLS restatement on job growth was really material and important for investors to pay attention to because assumptions were made based on the numbers and executed on, and then they got revised dramatically. I mean, think of it as about 30% per month overstated over the last year, March to March.
Here's the thing. It seems like investors off the heels of that conference today at Jackson Hole are really firmly believing that the focus is changing, right, from inflation over to the job market. And you have Powell having confidence that inflation is sustainably on a downward path, yet he said that the slowdown in the labor market was unmistakable. Nancy, you seem less convinced that inflation is not as much of a concern still. Do you believe in that balance shift right now, or do you think inflation, especially given the election coming up and the policies that each candidate has in place, could be a real curveball?
Yeah, well, first of all, we've got low base effects that we're dealing with in the coming months. So that makes it harder for the number to be soft or modest, I guess is a better way to say it. We've been concerned about the job market for quite some time. I think the Fed's again late on this issue. But the good news is people, for the most part, are working. And the unemployment rate is really driven by supply of workers more than job cuts. But that can turn on a dime. So I think it's going to be difficult to assess. But I think if you focus on the high quality companies with the really strong balance sheets, excellent free cash flow and dividend growth, which always gives you an indication of management's optimism. You'll be relatively safe if the market decides to sell off on, new data coming out. But I'm concerned that this felt like a victory lap to me, and I don't think the victory has happened yet. I got the big laugh line on, the good ship transitory. I see a bunch of my shipmates out there, but Powell's the captain of the ship. And so whether they agreed with him or not, he needs to make the right decisions. And I'm just not convinced this was the speech. It certainly wasn't the speech I wanted to hear.
Nancy, it's interesting because all week you've really had this S&P 500 flirting with record highs, and it hadn't really touched that point. It seemed to stop just short of it. Plus, we have a lot of people on this program telling us that there is a lot of fear still under the surface. Options activity shows you as much. The VVIX also shows you as much. A lot of catalysts in the next couple weeks, including NVIDIA earnings. How, as an investor, do you prepare for that?
Well, as an investor, Sonali, I often feel unprepared because there's so many data points. But I think you pay attention to the guidance. You pay attention to the other names in the space. We happen to own AMD. That was a great report, the last one. I think you can discern from that some things. We know that the hyperscalers are spending a lot. In fact, we know that because Wall Street was not happy about it and sold the stocks off. So I think NVIDIA will be unlikely to disappoint. And then you need to hear what the guidance is and, how delayed is Blackwell? What are the expectations for 2025? That's what's going to matter to the market, I think.
With NVIDIA, is the risk more to the upside or the downside at this point? Given the run-up we've had in the whole world of AI and NVIDIA in particular, is there really even that much more upside to the stock, Nancy?
I think there is, Sonali. I mean, if you go back and look at any new innovative technology and how long the stocks have run, I mean, you can go back and look at when Amazon went, from when Amazon went public until today, and there was a huge drive. Then it sold off, as we know, during the internet bubble, but the stock is up over 175,000%. So these companies that can pivot and adapt with visionary leaders, I think it could continue for some time because they'll find the next new thing. And so we don't own the stock because it's so expensive. We've been waiting for an opportunity. We got close when it sold off. But remember, the sell-off, the run-up is off a sell-off. And on a PE basis, even though it's expensive on the metrics we look at, it's really not that expensive if you look at price earnings to growth. None of the Mag 7 are either, really. They're below median and below the average over the last 10 years.
Nancy, we have to leave it there. Happy Friday to you, and looking forward to next week, of course, as we've been talking about a lot of catalysts ahead. That is Nancy Tengler of Laffer Tengler Investments. Now, Bloomberg's Michael McKee is going to join us from Jackson Hole for more on that speech earlier from Fed Chair Powell. And Mike, being on the ground, seeing the reactions from the people around you, the other Fed governors, investors, what have you, how did they feel about the ripple effects that the speech is having?
Nobody was surprised, at least on the central banking side, that the chairman came out and said this. And they all pretty much agree that it is time to start thinking about adjusting policy. The market reaction has drawn some quizzical looks because they thought the markets knew that as well. But they're not unhappy about it because, of course, stock market's up and bond yields are down, doing part of the Fed's work for them.
It's interesting because there seems to be a diversion here in what people expect that first cut to really look like. Whether 25 is the reality, whether 50 would be alarming or in line with expectations, given what Fed Chair Powell said about the job market. How do you read those tea leaves?
Well, the chairman did not give us a sign one way or another of which way he's leaning, but he sounded dovish in saying that the Fed would do whatever it takes to defend the labor market. You could read the possibility of 50 basis point cuts into that. But members of the Open Market Committee have told me they don't think that's the wisest way to go, and they don't think that's the way they're going to go unless we get some really bad news, because they don't want to give the impression the economy is worse than it is, and they don't want the markets to start anticipating anticipating regular 50 basis point cuts. So they anticipate doing 25 and sending the message that this is going to be the pattern, that 25 and then maybe 25 at the next meeting, and the next meeting after that. They will take a cautious but regular approach to cutting rates.
Right. Once you give a kid some candy, they will ask for more. Bloomberg's Michael McKee, thank you so very much for all of your coverage over Jackson Hole. Please come home to us soon. Now let's take a look at some midday movers. We have with us Abigail Doolittle.
Well, Sonali, we have lots of movers here today, and to the upside, we have big tech after that speech from Fed Chair Jay Powell, really suggesting that the liquidity gates could be open, the cuts that folks are anticipating. So not surprisingly, the likes of NVIDIA, Tesla, Avago, or I should say Broadcom, the old name Avago, and then Apple. You know, NVIDIA, though, it's interesting. You and Nancy Tengler were just talking about NVIDIA. I think something that we all need to keep in mind is the expectation around numbers. Last quarter, they put up 262% top line growth. This quarter, it's expected to be just 113%. So that's really a pretty big drop. On the bottom line, 585% growth year over year last quarter. This quarter, just 156. So for investors that aren't worried about that, that could, even if they meet, be a little bit of a ripple, so to speak. They really need to put up those big numbers. In terms of what's leading to the downside, well, Intuit, the tax prep software company, they did beat the fourth quarter, but their full year view, it is strong. Long-term growth, though, a little bit less than folks had hoped for. Pinduoduo, well, that Chinese company, it does report, technology company reports next week, and down into that report. We do have the shares of Bill down, the back office company. Results failed to impress. There was really a mixed bag there, prompting Goldman Sachs to cut them to a neutral, already down 42% year to date. And then Red Robin, they cut the full year. Investors not liking that. In terms of today, Sonali, there's some people on social media who think that that could be the sell the news moment around Powell's speech. I would say that one of the dividing stocks, one of the in-between stocks, is Microsoft. It's actually been down 3 days in a row. And this really reflects, because this is the interesting thing, Fed Chair Jay Powell is dovish here, but that also pushes the dollar down clearly. That pushes the yen higher. If that yen carry trade were to unwind again, that could be painful. Microsoft down for a third day in a row, maybe suggesting that.
As we've been talking about, a lot of risk there under the surface. Bloomberg's Abigail Doolittle, we thank you. We're looking forward to your coverage next week. And coming up, we're going to switch gears. We're going to talk about politics. Vice President Kamala Harris formally accepting the Democratic presidential nomination. We're going to go live to Chicago next. This is Bloomberg.
I promise to be a president for all Americans. You can always trust me to put country above party and self, to hold sacred America's fundamental principles, from the rule of law to free and fair elections to the peaceful transfer of power.
Vice President Kamala Harris has formally accepted the Democratic presidential nomination, wrapping up the DNC last night with a speech vowing to prioritize a fight for the middle class. Bloomberg's Anne-Marie Hordern has the latest from Chicago. Heavy on rhetoric and vibes, light on policy. What do we know?
Yeah, that's exactly right. We're still waiting for a lot of details to come out of this campaign on how Kamala Harris would govern if she was elected president. A lot of this seems to be carrying on some of the proposals from the Biden-Harris administration, and you saw her lean into that last night. What I felt like it was cherry picking some of the things she liked from the Biden administration. When it comes to the economy and taxes, she talked about not raising taxes on the middle class. When it comes to foreign policy, she mentioned standing strong with NATO and Ukraine. She really leaned into reproductive rights as something the Democrats want to make sure that they are amplifying, especially in these swing states, and something that she did while Biden was president. It was very notable that Joe Biden really didn't like to talk about abortion, but this was something that Kamala Harris really went out and talked about. So that was unsurprising. And then, of course, when it came to immigration, which is notable because Donald Trump was at the border yesterday trying to counter a program, she talked about trying to revamp that bill, that bipartisan legislation that was killed, that was drafted by Senators Murphy and Senators Lankford. But we don't have details of these policies. And this is an issue for some because we have seen the vice president flip-flop on a number of issues like fracking, which is going to be incredibly important to voters in Pennsylvania, and private health care. But now they have just over 70 days to November 5th to really get out and continue this energized momentum, but potentially outline more details of those policies. Whether or not they want to do that remains to be seen. We know there's going to be a debate. We're still waiting for her to sit down in a one-on-one interview with a journalist. I go back to what Tobin Marcus Shinali said to me this morning of Wolf Research. He said what the campaign is trying to do is strategic ambiguity. Talk about in broad strokes policies, some of this populist rhetoric that maybe resonates with swing state voters, but as much as they can, avoid deep details on policy discussions.
Absolutely fascinating. Of course, almost 75 days till that election. The countdown is on and a lot of uncertainty. Bloomberg's Anne-Marie Horder, we thank you so very much. We're looking forward to your coverage on surveillance once you're back. Now let's take a look at how markets are thinking about the upcoming presidential election. Karissa McDonough of Nottingham Trust joins us now. And you had that DNC speech yesterday from Kamala Harris. You had, of course, that big moment for monetary policy today with Fed Chair Powell at Jackson Hole. And one major question on the minds of investors are not now that September rate cut, Karissa, but the rate cuts that would come after it. How much room is there really when there's that much uncertainty about the fiscal path ahead and the economic path ahead?
Yes, Chanel, thanks so much for having me, and that's an excellent question. When I first was going to come on, I was going to talk about how Powell has a very measured approach. That was like kind of thrown out with that speech today at Jackson Hole. I think 2 cuts is an entirely reasonable possibility based on his comments. But, to your question about the future path, I think there's a fair amount of data uncertainty, just like you said, but there is more happening in the job market and just kind of the revision to the monthly payrolls that we saw, kind of 800,000 jobs just disappearing. We heard from Austin Goolsbee a month or so ago talking about how they don't want to risk this golden path where, inflation, they're keeping that under control or they're curbing it, and they don't want to spike in unemployment. So this is kind of the path that they're treading. And I think, yes, there's a fair amount of uncertainty moving forward. But if I had to pick, I think based on the comments that we've been getting from the Fed, I would think that they would be more likely to front-end load cuts rather than space them out. And that's in contrast to previous policy that they've engaged in.
How much is that is predicated here by the job market that you're seeing? Of course, in addition to inflation data that we have coming up, in 2 weeks from today, we have the next jobs report. Yeah. Those revisions this week were significant, some of the largest we've ever seen to prior jobs data. Does that tell you that perhaps the job market was much weaker than we initially expected? And how does that inform how you read the next set of data?
Yes, that's exactly right. Another thing that I've been thinking about, this Fed has access, I think, to much more timely and accurate data. But when you get revisions to that degree, you're exactly right. Decisions were made based on the accuracy of that prior data. So it does call into question kind of the forward path. But I think, this is definitely not, I'm going to say, not a proactive move on the Fed in terms of possibly front loading. But I do think that if they are now calling into question kind of the accuracy of forward data, and we're looking at, possibly the August jobs report with fingers crossed, I think that they are trying to make policy the best they can with imperfect information. But this is, again, one of these situations where they want to be proactive, even if that's not necessarily possible. So yes, I'm still in the camp that they're going to be a bit more aggressive than they had been historically.
At the end of the day, that's not the only data we even get next week. It is certainly some of the most important data in the next 2 weeks, but we also get consumer sentiment data. Karissa, how much do you feel this consumer is starting to weaken, especially when you look at all those earnings reports? They're very mixed in terms of what consumers are willing to spend their money on right now.
Yeah, excellent question. Something that we've been looking at is kind of the bifurcation of the consumer. Yes, there are definitely a set of mixed earnings coming out recently, Average statistics don't necessarily tell the whole story. I think that, there's a broad swath of weakening for a majority of the American consumer. And, those data points, whether it's through consumer surveys or consumer sentiment, that doesn't always bubble up as effectively as maybe the Fed would need it to inform policy in a timely way. But yes, we definitely believe that the average statistics are not telling the whole story, and there is weakening occurring that we need to be cognizant of.
Karissa, we thank you so very much. That is Karissa McDonough of Nottingham Trust. Thank you, and happy Friday to you. We're going to turn over to that big story this week, that BLS blunder heard around the world. On Wednesday, the Bureau of Labor Statistics failed to release a key revision to jobs data at 10 a.m. Eastern Time. Took around a half an hour or so to really get out there. Bloomberg's Liz McCormick joins us now because one part of that blunder was really this idea that certain banks had gotten the information early when they contacted the BLS, so the data was not uniformly really delivered to the market. How do you explain what went on and what the ramifications are?
Yeah, and to be clear, those folks that called and got the data, they did nothing wrong, and that's their prerogative. And many people were calling, but only a few seemed to get through and get it. And I think, Sonali, the backdrop to this, like you've been laying out, there was focus on labor and concern and heightened interest in this revisions that not a lot of people always watch. That I think people were also not familiar with how to read it. Coming out, people misread. We're just watching our internal chats, people misread on this, some of the last year's data that was on the website, because they're not familiar. Then, like you said, some people got these numbers, so people were suspect, do we even believe it? We're confused. And it just created a lot of us. And then it became clear when the numbers really came out and all the media, including us, were able to report. People in the markets were saying that this is just not right. You know what I mean? There needs to be better check and balances, and they're a bit, let's say, frustrated to say the least. But there was a lot of confusion, and the fact that a few folks had it and had the right data just creates a lot of animosity among the street that this data should be released better. And there's been some other issues through the recent past with the Bureau of Labor, so people are kind of have that in their craw.
Really quickly here, in about 30 seconds, Liz, how do you feel about the reaction today from Powell's speech as well? Just to shift gears, you're so close to the bond market here. Bond traders, yields really driven down pretty significantly. Tons of people saying it's too much too far still. What's the take?
Yeah, I think it's clear. I mean, and he's been the clearest ever that he really wanted to say for sure we're cutting. We know they're cutting now. They left open the 25-50 and what the pace goes thereafter. So there's still going to be a lot of volatility, but this gave all the doves enough to feel like, we can take rates lower. It's a risk on too, because he said he doesn't want the labor market to weaken anymore. So stocks are doing well. So for now, I think the take in the markets is right. Now we have to parse how the path goes.
Liz, we thank you so much for your time. Of course, we were talking about it, so much more critical economic data ahead and tons of moves in that bond market. Take a check on these markets before we let you go, because we've been talking about that rally in markets. Quickening a little bit here, we have this S&P 500 now up 0.6%. The NASDAQ 100 is seeing similar vibes. Yes, they are up at the day, but we are not hitting those records that Wall Street really was hoping for this week. We are also not even at session highs or where we were before that Powell speech, but a bid in the market nonetheless, especially in that bond market. I'm Sonali Basak. It does it for Bloomberg Markets today. Stick with us through the end of the day. An interesting day indeed. This is Bloomberg.